Hi traders, welcome to a new video, and let's talk about a stock. And today I want to talk about C. So C Limited, the ticker symbol is SE, and I wrote down here the subline, a potential new mega cap company. And a mega cap company is a company which has a market cap above 500 billion. The current market cap of C is 160 billion, but I think we have a potential new mega cap company, and I want to share my thoughts with you and also the analysis from the chart and also from the last quarterly report. So let's switch into MarketSmith. So I use MarketSmith as a charting software and screening software. And here you can see the chart, the daily chart from C Limited in real time. And you can see the stock is up and broke out of this wonderful VCP shaped, so volatility contraction pattern shaped price movement here. You can also see we have a very strong relative strength rating, so 95. So the stock outperforms 95% of all stocks in the last 12 months. And the stock also held up very good during the last days, where we saw a pullback in the Nasdaq and in the general stock market. But what I want to show you and what I want to talk about is the super growth of C Limited in the last quarters. So you can see here, the sales numbers of the last quarters, and you can see that C grew extremely fast. So quarter from 174% growth to 99%, and in the last quarter almost 160% growth. That is the pace you normally see with small cap, micro caps, or some mid cap stocks. But this year, that is the large cap stock. So we have 160 billion market cap, and the stock is growing almost 100% every quarter. So the sales came from 777 million to 2.28 billion in the last quarter. So, and when you have a small cap stock which only has a revenue of say 50 million or say 100 million per quarter, it's not so difficult to push the sales up to those numbers. So that means a growth of 100%. So you find such a growth more often with smaller names, but this is a name which produced a 160% sales growth and has a 2.28 billion revenue in a quarter. So that is much more difficult to push such numbers to new record numbers and new record growth. So, and when you look at the chart here from the last months, the IPO here was in 2017. And the stock went up from $10 from the low to 300 now, so over $300. So that is a rapid growth. And the growth from the revenue, this is also represented in the strong growth of the stock. And you can see, especially after the bull or after the small corrections and bear markets, so every time when a new bull market started, the stock really exploded to the upside. So you can see that here in March 2019, we had a very strong gap up here in that situation on super volume. So that was the time when the stock left the IPO base here and exploded to the upside. So the first time we saw big institutional buying activity here. And then the stock went from almost $20, so 16, 18, $20 to around $40 here, and then created a new consolidation. And then here during the small bear market here in 2020, the stock also corrected from around $50 to 35. So, but it found support here at the EMA 40. So that means the weekly EMA 40, that is the EMA 200 in the daily chart, and created a wonderful V-shaped correction here. And then afterwards, the stock exploded to the upside and went from around 50 to 300 US dollar in the last months. Of course, C benefited from the COVID-19 situation, because the company is engaged in digital entertainment and e-commerce and payment in the Asian region. So, and when a lot of people stay at home and enjoy digital entertainment, of course, a company like C Entertainment or C Limited benefited from that. So you can see that C has a very strong sales growth. Also, the management has a high stake, which is a benefit too. So the management believes into the company and do not sell every share they own. But C Limited has a negative EPS. So yearly negative EPS and also quarterly negative EPS. But that is not a problem. So I mean, look at the sales numbers here. And you know that C use every profit to reinvest the money into their business to grow their business. And that's a good strategy, especially for young companies. So when you take every cent you have and you reinvest it into your business to grow faster. So that means you maybe hire some more marketing employees, or you reinvest the money into research and development to develop new products, or you expand into new countries or something. And that is a very good plan, and that's a good strategy to grow, and also to grow your market share in the countries. And one thing I really like about C Entertainment is that C is not a China company, so it is a Singapore company. So, and especially in China, we saw a lot of trouble with companies and manipulated balance sheets and manipulated sales numbers, etc. So the trust in China companies is very low at the moment. And C is absolutely the opposite. So C is a Singapore-based company. They are they do business outside of China, which is also good, because there are a lot of entertainment companies in China, and it's very difficult to compete with them. So it's better to look outside of China and go to to other Asian countries, and they are also doing business in Latin America. And I think that is a good strategy. So because there are so many local companies in the Asian countries which offer gaming and entertainment and e-commerce. And if a global player comes around with a good brand and also proven products from other countries, they can, or they could have a benefit and an advantage above the local companies, and especially when they have very good products which are already working in other countries. So maybe the adoption rate in new countries is a little bit higher. So that is definitely an advantage from C Limited. So they are very professional. They can compete with local smaller companies. They have a lot of power when it comes to marketing and research and development. And that is very difficult for smaller companies and local companies to reach. And you can also see the number of funds here. The number of funds, so 1,600 funds already own C Limited. So this is a stock which has a lot of support from institutions, and already hedge funds like the hedge fund from Druckenmiller, for example, they own also C Limited. So a lot of people believe in the company, and they have positions in C Limited. And here on the bottom, you see a few funds owning C Limited, and you can see the flagged funds. They are funds I personally track and I follow them, and I think they are very good stock pickers, because they all outperformed the general stock market in the last years. And you can see here T. Rowe Price, for example, Transamerica, Morgan Stanley Institutional Growth, Virtus Savenberger, Morgan Stanley Insight, Fidelity Growth, and also Berkshire Focus, they own C. So they decided to add C to their portfolio. And you can also see that they own a high stake in the company. So T. Rowe Price, for example, the global technology fund, has a stake of 7.37%. So that is a really huge position for such a fund. And also Berkshire Focus, that's a little bit smaller fund, so they own 3.9%, or they invest 3.9% into C. So let's look quickly here at the daily chart again. I already spoke about that. So the company, or the stock, broke out here of a very nice VCP shaped pattern. You see a lot of accumulation going on, so big blue bars here, especially now after the release of the earnings here. So there was no earnings gap or similar, because the market also corrected when C released earnings, and that also held the stock back a little bit. And I already talked about China and the problems we see in China right now. And on the day when there were bad news about China, I think it was about the China growth, or they regulated some companies, that was a day when C Entertainment gapped down here. But in the next days, C were able to move to a new all-time high. So it shook off all the weakness, and that also shows me that fund managers do not connect C to the China problems we see right now. So when we look at similar companies from China, so for example, Billy is one entertainment stock from China. You can see a large downtrend here. So the stock corrected from 150 to 64 at the moment. Alibaba is a large e-commerce company in China. And they also own entertainment companies and payment and delivery and a lot of other things. So, and you can see here the stock went down from 320 to almost 160 in the last couple of months. And Huya is also another stock. Let's look quickly at Huya. They also went down here from 35 to 10. So a lot of trouble going on in China names. And the companies here are still growing, so it's not that they are out of business or something. So sometimes they are also larger companies. And also, if we look back to Billy here, for example, so let's do that for a second. Billy was one of the best stocks here in 2020. You can see that here, and it's a 22 billion market cap company. It has a very strong growth here, but at the moment nobody trusts China, and also the economy is maybe, or the outlook of the economy is maybe not so good. So however, it doesn't matter. I'm personally not looking so much at the economies of countries. I look at price, and what I see here is definitely a downtrend. And C Entertainment, I mean, they are in the same area, so in the Asian region, but they are focusing on other countries outside of China, and I think that is definitely something where the company benefited from. So I wanted to also look with you at the last quarterly report. So let's look into the presentation here. Second quarter results from August 2021, and let's look at the revenue first. So you can see here the Q2 2020 revenue, and that's the 21 revenue. And you can see 159% year-over-year growth in total GAAP revenue. And you can see some big blocks here. And the block here at the bottom, that is the DE revenue, so digital entertainment revenue. Then you see the second block here, and that's EC, that is e-commerce. So, and you can see, okay, almost the total revenue is coming from digital entertainment and e-commerce. And then there is a small new block here that is DFS, Digital Financial Services. So that is a new sector or new department in C, and they try to become a payment company. So, and And also they now have a bank license, so they can do money transfer, etc. And payment is something which all companies want to do, because it's a super easy, scalable business with low costs. And you can you are transferring money from people, or you're doing payments in internet and e-commerce, and you have two big advantages. The first thing is you get a lot of data. So when people pay in other business or in other internet stores and other small shops or something, and you pay with a credit card or a digital payment app from C get the data where the people paid, and sometimes also what they bought, and that is really really helpful if you want to do advertising, or if you want to do generate product recommendations or whatever. So the data is super important, and you can use them in a lot of ways. And on the other side, you get a small fee from every payment, and that is great. So the more people use your payment app, the more money comes in, and you have a very low cost, and that helps you to generate profits in the company. So if you look at a lot of software companies who are offering platforms at the moment, so Lightspeed, for example, Shopify or similar, they are going into the payment business, and they try to grow the payment business as soon as possible and as fast as possible, because they know that they get a small fraction of every transaction. So it's absolutely scalable, the business, and it's also profitable because the costs or the expenses are not so strong. And if you look at some other strategies and press releases from companies, they sometimes say, okay, we are currently not profitable, but we assume that our payment business will be profitable in the next years, and they or the payment business itself, they will help us to become profitable. So, and they also use the profits from the payment business to reinvest it into their core business and grow the core business. So payment is definitely one of the big trends, and also helpful things to turn a not profitable company into a profitable company. And we're seeing that also here in C Entertainment or C Limited. We're seeing that here. So the estimate for 2021 is a minus 2.22 EPS number. So and the expected loss in 2022 is only 81 cents. So they are already improving the business. So, and it's not only because of payment, it's also because they get more professional in other areas, and also they optimize their processes. So let's look here at some other numbers. So you can see that the bookings are going up here in digital entertainment. The revenue in e-commerce is also growing very fast. And I mean, look at the numbers here. They are coming from 400 millions in revenue in the EC, so e-commerce area. Now they have 1.2 billion. I mean, they grew the business by 200% here. That's a huge number. So the most people are dreaming about, or the most companies are dreaming about such growth numbers. And again, we're speaking about a billion business here, not a small million business. So, and digital entertainment, so they also speak about the numbers here. So quarterly active users, so how many people are using their apps and also play the games, etc. So 725 million people use their apps, so that's a growth of 45%. But what I personally find much more interesting is that they are getting better to convert active users into paying users. So you can see you have a year-over-year growth here in the active users from 45%, and paying users are 85%. So the paying users are growing faster than the active users. And that shows me, okay, they improve maybe the processes, they are getting better in marketing and sales, and they convert more people to paying users. And you can see also that in Q2 2020, 10% of the users were paying users, and today it's more than 10%. So if you compare 725 to 92 million, so that's more than 10%, so they're getting better and better. E-commerce also gross orders 127%, so that's a lot. And also the GMV, so they are a platform, so that means partners are selling products on the platform. That's why they have GMV and not revenue here included. So GMV is gross merchandise. Not sure what's the V here. So usually it's gross merchandise revenue or something. So they're doing 15 billion gross merchandise revenue on the platform. So, and that's a huge number. I mean, 15 billions in a quarter, that's 60 billions in a year. So it's not Amazon, but that is definitely a huge number. And also the orders are growing very fast here, much faster than the GMV. That could be that people are now buying smaller products, maybe daily products they use in their daily life. And that's also a good thing. So, and then let's look at the DFS, so Digital Financial Service Department here. And today they are doing 4.1 billion transaction or payment volume here in Q2 2021. That's up 150% compared to last year. And they have 32.7 million paying users in the mobile wallet app. That's plus one of 109%. So, and I'm very sure that they try to grow the C-money business or DFS business as soon as possible and as fast as possible. So, because that is a huge potential to the upside. And when we talk about potential, so I said in the introduction that this is maybe a new mega cap company. And the reason is very simple. So if we look at the fast growth here, so quarter over quarter, 100%, in the last quarters here, 160, 170, etc. Of course, the growth will decrease in future. So it will become harder and more difficult to grow bigger numbers. So if you have 3 billion, 4 billion, 5 billion revenue per quarter, it's becoming more and more difficult to grow the numbers at such a high growth. So, but that doesn't matter. I mean, if the company is able to grow their profit, their sales in the next quarters, say 50% or 70% or something, that's enough because the revenue numbers are so high. And also, if you now think about that the company will maybe become profitable in 2023, 2024 or something, that also increases the value of the company. So, and now if you look to the price to sales ratio, so I personally don't use so many ratios, but the price to sales ratio is something it's something I personally look at sometimes. So when you now say, okay, they are doing 2.3 billion revenue per quarter, so that means in 4 quarters they are doing 9.2 billion revenue per year. So in 4 quarters, 9.2 billion revenues per year. So when you now look at the market cap and you divide the market cap by the 9.2 billion, so that is less than 20. So that means the company is trading right now at a price to sales ratio less than 20. And if you now look at all the companies, so like software companies, like digital entertainment companies, whatever, so 20 is not very high. So there are companies around in the growth sector which have a price to sales ratio of 20, 30, 40, 50, 60, whatever. So, and that shows me that the company is growing so fast that maybe the stock price is adjusting slower to that. And that also gives me some confidence that maybe there is still some potential to the upside here when we look at C. Of course, I can be wrong, my analysis can be wrong, and I will change my mind in a second if price do not follow my analysis. So price always comes first. So let's look at the gross profit. That was also something which I personally find extreme outstanding. So they grew the gross profit, so the gross profit from revenue by 364%. So they're coming from 200.8 gross profit to 930.9 millions gross profit. So a huge up move here or increase. So, and also when we look at the EBITDA, so the EBITDA here was negative, so 7.7 million, so a positive EBITDA in 2020, and today in the last quarter there was a loss of 24.1 million. So, and now you can ask yourself, is that a problem? So they're generating earnings before interest and taxes of 24, or a loss of 24.1 million. Sorry, that is not a problem. I mean, look at what they generate in gross profit, and also look at the revenue. I mean, 24.1 million. That is almost nothing. And what I personally find super interesting is if we look at where is the money coming from, and what is the sector which produces positive and negative EBITDA. And if you look here at the blue, so the blue above the zero line here, so digital entertainment produced a positive EBITDA of 740 million. So, and they use all the earnings they generate here, all the profits, to finance all the other businesses. So that means they are refinancing here ecommerce, the digital service sector, and also other smaller departments here. So, and that is very clever. So use the money from the business which is profitable and which is good, and refinance all the other businesses which you want to grow. So, and if you compare that they did 2.3 billion revenue, and you only have a loss of 24 millions in earnings before interest and taxes, so that is really nothing. So let's look at the costs here. Also, the costs are up. That is expected, because of course, if you want to grow your business super fast, you have to invest into sales and marketings. And yeah, you can see that. So marketing expenses more than doubled here in the last quarter, and also research and development here more than doubled. And that's also good, because research and development always means they are investing into new growth, and also sales and marketing. That means they are investing in new growth. So because the most growth in such a company is coming from sales and marketing, and also research and development. So, and when you look at general and administrative expenses, you can see that they did not doubled from quarter to quarter here, or year over year, and that's good. So because you have so much, or so many people in the administrative areas, and if you are able to not scale the expenses here in the G&A section so fast, you are realizing effects or scale effects. So when the company is growing more and more and more, and you can use the same people for the same jobs, that is definitely one of the effects of scale here, and that's good. So they are on the right track here. So when we look at the net loss here, so that is the overall loss they generated here. So that's 400 33.7 millions in the last quarters, and they had a loss of 393 in the last quarter. So, and now again, you must have in mind how fast they grew their sales numbers. So, and when you now see that they have almost the same loss as in the last quarter 1 year before, but they grew their revenue by 160%. That is a large number, and they produce almost the same loss here. So the losses are not growing so fast. They stop. They are flat here in the current quarter. So of course that can change in the next quarter, but for me that's definitely a positive sign that they are on the right track. So, and that's the cash. The cash the company owns, so for 5.6 billion. So they can also do some smaller mergers and acquisitions, and they have a lot of cash available. So if they need them. So, and overall, they also raised the full year guidance here, so by 10% in both sections here, digital entertainment and also e-commerce. So they are seeing that that everything is much faster growing than expected. And you can see also here, this is a 2021 guidance for the whole year. So you can see that e-commerce is growing much faster than digital entertainment here. So maybe they are, they see, or they are interested to grow the e-commerce sector much faster in the next years. So appendix, that's something we don't have to look at. But if you can see how I personally go through such a quarterly statement and what I look at. So I always look at the revenue growth. Where is the revenue growth coming from? What is maybe new potential business area where they invest? I look at what is the loss in comparison to the revenue growth, and that also gives me a picture of the business from the company and how the business is working. And that's very interesting for me. And again, so if C is able to grow at a similar pace here in the next quarters, I'm very sure that we'll see a much higher market cap. But again, I can change my mind very quickly. So if price is not following my analysis or my vision about a stock, I'm out very quickly. So I'm a trend follower. I'm a price action follower. And I'm not a believer in a company. So when a company is great, but the price is negative, or the price action is negative, I don't put any money in the stock. So, but if the price action is positive, as we saw here in 2020, for example, I'm invested in the stock and I have a position and follow the stock as long as possible. So it was a little bit difficult to get into the stock here, but that's expected because we have a very, very weak overall stock market, and especially growth stocks are not doing well at the moment. But you can see that the stock is very strong follow-throughs here to the upside, and if you compare that to the Nasdaq right now, so the Nasdaq is currently in a pullback. And C Entertainment, or C Limited here, is on a new all-time high. So that means also the stock is much stronger as the stock market. All right, so I hope that you liked this video. Give it a thumbs up or give it a thumbs down if you don't like it. Leave a comment if you have questions or any feedback about the analysis. Of course, you can follow me here on YouTube and every other social media network. I personally always recommend to subscribe to my free newsletter. I send it out every Sunday with some trading tips and also 3 stock ideas from my personal watch list.